In this video, I want to show you guys the best pre-market setup on the order book that I've seen in a very long time. This was effectively 0 pips of risk. And just before I go any further, I just want to say that nothing in this video should be taken as financial advice, as I'm not a financial advisor. Consider this as education and entertainment purposes only. Now, the stock today was HWK, and this happened on the 3rd of the 3rd, 2021. Before I go into the actual tape reading, I want to show you guys this chart setup, as I got a video specifically on this, where the stock rallies on really high volumes, pulls back, and then has a nice big gap up, and the real struggle and resistance for a stock to rally beyond the major supply that happens. So check that out in the comment description below. Otherwise, let's take a look at the 1 minute chart and show you guys what happened. This was the trade from 6 cents where it opened, shorting it, and 5.3 was the bottom, but I myself personally only managed to take 4 ticks of profit on this one today. Otherwise, a few of the other guys I trade with managed to get a much bigger move, because obviously I'm a shit trader. So let's take a look at the order book, and I'm going to show you guys about a few seconds before the stock opens. And I want to explain some concepts in such a way that anyone who's new to match trading or order book trading will hopefully understand this. Now, in this video, this is a replay of Spark Iguana 2 of HWK, which is the stock ticker. This stock opens up at 10:04:45, so in about 10 seconds. And this is a representation of the order book before the stock opened. Now, unfortunately, I can't see anywhere the indicative price, which at 6 cents here is the actual price, sorry. So the indicative price is here, but it doesn't show the surplus volumes that I can see. Now, surplus you'll see in the auction period before the stock opens. And what it is it shows you how many shares will be left on the bid or the ask. Now, that's in the order book here, and I'll zoom in just to show you guys a little bit clearer. So this is the order book, and on the right-hand side is the ask or the offer, and on the left-hand side is the bid. Now, at the moment, 6 cents is the indicative price. So if this stock was to open, it'll be all traded. The match trade will be at 6 cents. Now, at this point in time, there's roughly negative 7 million shares. And what that means, for a surplus of negative, it means that whatever shares are left, that's how much is going to be on the bid. So negative 7 million means at 6 cents when it opens, there'll be 7 million shares remaining on the ask or the offer. If it was a positive surplus of 6 cents, a surplus of 6 million or 7 million, that's how many shares will be remaining once the stock opens on the bid. So let me show you guys exactly what I mean. So when this stock opens, this is roughly negative 7 million, and the stock will open up in 5 seconds. So this is the indicative price, and the surplus you can see on FP markets, on ComSec, or whatever platform you trade. So this is the very second the stock opens with negative 7 million surplus. And you can see at 6 cents, you'd rather be on the short side of this stock, because you would have effectively 0 cents or 0 pips of risk. So if you're short, let's say in the match trade before the stock opens, you have a short position at 5.7 cents of 200,000 shares. If the stock opens at 6 cents, which was the indicative price, your 200,000 shares won't be at 5.7 cents, it'll be filled at 6 cents. So now you have 7 million shares in the order book. So if I show you guys the order book, you now have 7 million shares at 6 cents as protection. So if this starts getting eaten away at, it goes from 7 million to 6 to 5 to 4 million, you can just cover your short position. You can just buy it back, and effectively you'll have 0 ticks of risk. There will be nothing but brokerage, right? So you'll be just paying the brokerage, but you'll effectively lose nothing in terms of your P&L. If this was 7 million positive surplus, the 6 cents will be on the bid with 7 million shares, and 6.1 will be on the offer. But in this case, it was a very, very, very significant short. I had a couple of 100,000 shares short at 5.9 cents. So I was 1 tick below the indicative, and we can see what happens now. If someone decides to buy a few shares, buy into the 6 cent wall for some reason, it's not a great idea. If you were long in the match trade right now, right? If you bought in at the match, which was 6 cents, you could close out for one tick of risk at 5.9. So you can see the difference between going short and going long, depending on the surplus. In this case, HWK had a crazy amount of surplus in negative, 7 million. So that's the trade, basically. Now, it doesn't matter what the news announcement was. It clearly was a decent news announcement because this gapped up from, I think it was 4.8 cents to 6 cents. So clearly it was good enough of an announcement that it gapped up that much. But I couldn't care less what the news was. I couldn't care less if they cured cancer. The book, when it looks like this, I want to be shorting every single day of the week because I have so much protection on the book. I can close out with such little risk that I feel comfortable being in that position on the match. Now, you might be thinking, well, is it really 0 ticks of risk? And it's not really. Like, there's a risk that someone will come in with 7 million shares and just buy the entire line at 6 cents. So then you won't be able to close out or cover your short at 6 cents. It'll have to be at 6.1, possibly 6.2. But that doesn't really happen that often, that an entire wall of $430,000 on a micro cap, so $75 million micro cap, it probably won't happen. So can it happen? Yes. Is it likely? Fuck no. It's just not going to happen. You might get 1 million or 2 million or 3 million shares just start lifting the offer, pretty much buying basically, but there should be at least 3 to 4 seconds to execute a buy order to close the position. So I have my order ticket ready. I click on buy and I have a double confirmation and I have my ticket ready so that I'm 1 click away to close out my position on this trade, should it go against me. So my plan was that if half of this 6 cent wall was getting eaten into, then I'd just close my short. It's that simple. But you can see I'm playing the trade now, 5.9, 5.9, 2 hits, 3 hits, gone. And then 5.8, then 5.7, and it's a cascading effect. And really, this video, I'm not going to show you guys about the reversal because that's not the point of this video. The point is to show you guys a low risk short entry, and this is probably one of the best order book setups I've seen in such a long time. There was 7 million shares on the offer, and that's a significant amount when you compare it to the rest of the lines, you know, compared to the bid. If we just go back just a little bit, and you can see just how much, I guess, how many shares there are compared to sellers on the bid versus the ask. So even if 6 did get wiped, you know, it's not like there's going to be much slippage anyway. Maybe you're really slow. You've got some fucking arthritis. Maybe your cat is attacking your foot. Maybe you spilled some fucking coffee on your keyboard. You probably still have time to bail out at 6 cents on the after the stock opens. Like there should be a substantial amount of time in order to just left click the mouse button and close the position. So guys, if this helped in any way, shape or form, please do consider hitting that subscribe button. It helps me out a lot. Otherwise, have a good one, guys.